All right, bulls and bears, welcome back to the channel. Today I'm out in front of this nice, let's say, mobile home community. I'm looking for my future home. Things are so expensive. I'm actually mentally preparing myself to have one of these homes maybe be my future residence. Maybe it'll be this one. Maybe it'll be that one. Maybe I'll put a new one up behind these. All right, I'm joking. Maybe I'm not joking because things are looking like they're going to get a lot more expensive here. And we see inflation, I think it's going to start heating up. And there's going to be a lot of economic and financial impacts for all of us, you, me, and everybody. So, of course, later on in the video, we're going to tell you how to benefit from this and how to take advantage from knowing what we're headed into. Sorry, I've got a little itch here. But let's get into some news today, folks. So, first of all, we've got these visas being given out, not visas, investor visas are being sold to foreign people for $5 million each. And we're being told that 70,000 people have now applied for these $5 million a piece, basically entry to the United States. Will grant people legal residency in exchange for $5 million. How crazy is this, folks? So first of all, let me just do some quick math here. We have a calculator. 70,000 times 5. 6 zeros, right? 5 million? Yeah. Okay. $350 billion, folks. Nearly 70,000 people have signed up for the new Golden Card, which is a scheme led by Commerce Secretary Howard Lutnick that will grant foreigners legal residency for $5 million. They even launched a website for this for would-be applicants. Lutnick said Monday morning his dashboard showed nearly 68,000 people. They're anticipating 70,000 here, though. Shortly, it's actually going to be made of gold. The card that these people are going to get is going to be made of gold. And it's very interesting. So he said the initial idea for this came from some donor, John Paulson, as a way to raise revenue for the U.S. and help it pay down its $36 trillion debt, which is nearly $37 trillion right now, folks. What did I just add it up to? All these combined, what did I just say? Was it $350 billion? Folks, that's not going to barely even make a dent or a scratch. It's not even a drop in the bucket of the total debt. They're never going to pay this off, folks. There's not going to be enough people to take advantage of this to pay this off. Not even not to pay it off. That's obvious. But not even to make a dent. It's not even going to be a drop in the bucket. And I might even think it's not going to be a drop in the ocean. All right. This is crazy, folks. The things that they're coming up with to pay down this debt. But at the same time, they're not really slowing down spending. So it's never going to work. It's a gimmick. I think something just to get attention, to put in the news, to make people think that they're really actually going to do something. But I don't know. Maybe I'm wrong, but let me know down in the comments. Is this actually going to help anything, or is it going to help anyone or any person? Or is it just going to be the rich get richer? I mean, in this case, I think it's going to be the rich get richer. Kind of like a lot of things that we see going on right now, a lot of programs. Doesn't it always seem like the rich just always end up getting richer? All right, let's talk about what's happening, though, with this escalation, battle, and a war that we're seeing on the doorstep here, which actually the U.S. is involved in. What do we have here? Iran making more threats, and they're saying they could resort to unconventional retaliation, folks. What if this gets so bad? What if they bring back the draft? What if something gets so out of control that the U.S. not only financially is involved? What if they bring back the draft because they don't have enough people, because enlistment is down in the Army and all the branches? Enlistment is down. What if they have to force people to join by reinstating the draft? After all the other crazy things happening right now, would you even be shocked or surprised if they reinstated the draft? I wouldn't even be shocked or surprised, honestly. A number of analogies to consider. They're talking about unconventional warfare. weapons that we haven't even seen yet. So obviously, there's some things out there that we don't know about. We're not privy to, as I guess the word civilian, would that be right? We would not be privy to. And even people in the armed forces aren't privy to some of the things that are available but just haven't been used yet on a wide scale. So the weapons, they're saying here basically in this article that these weapons out of the Financial Times, they're talking about these weapons are unconventional and never before seen. Can you imagine what type of weaponry they have out there that we haven't seen yet? And all of this is made available or made possible by money that they can just create. Remember, if this had to be paid by working people like you and me, if we had to give up a portion of our paycheck to fund this and any other war or conflict or weaponry, there would be no wars. You know why? Because nobody would want to give up their paycheck for war. I think there would be no war if it weren't for this. But because they can just borrow endless amounts of money, right, and put it to wherever, that's why these things are happening, right? I think this is all bank driven and money creation driven. Again, would you give up a portion of your paycheck for weaponry, bombs, etc.? Let me know down below. I think 99.999% of the people, maybe even 100% of the people, would say no. All right. And again, let me know if I'm wrong. Feedback about any of this, please let me know down in comments. But I think that's the reason for all this craziness. It all goes back to the source of the money. Follow the money, as they say, right? Follow the money. All right, but let's transition a little bit here back to U.S. soil and the economy here and the situation right now with working people, what are known as being the backbone of the economy, with consumer spending being about 70% of what's looked at as economic growth. So when consumer spending slows down, which it has been, we just had a printout earlier this week that showed that consumer spending was down 0.9%, which is not big. But if that continues, that could snowball into a very big drop in spending. Americans are also pulling back from restaurants. Is it enough to where restaurants will be empty? Well, some of them, yeah. Some restaurants are closing down, so it's already happening. Are you going to see Chipotle empty tomorrow? No. But it is coming out here. This is out of Bloomberg, that restaurants are seeing a drop in traffic. We know there's so much debt out there. People are being picky and more choosy about where they're eating. More people working at home or eating at home, maybe. Spending at restaurants and bars has slumped in May by the most in more than 2 years, underscoring how tariffs and geopolitical tensions are making consumers nervous about their finances. I think they're missing out. I think the story is missing out the fact that just people have so much debt right now, folks. We're in record levels of debt, more debt than we were before the financial crisis, and not just more because there's more people, more like on average. The average debt is even higher. As we talked about, sales fell 0.9% last month, the most since February 2023. So that's almost 2.5 years. The Commerce Department data showed Tuesday it was part of the biggest retreat in retail sales since the start of the year. And of course, we haven't yet felt the impact of the tariffs, folks. What's going to happen when the impact of the tariffs actually hits? And we're already seeing this big drop off. How bad is it going to be? Am I overreacting? Or will nothing happen? Will they just come out with something to kind of gloss over this? Kind of like 2020, we saw the stimulus checks, which, by the way, didn't really save people long term. It helped people short term, but it hurt most people long term because it caused prices to rise so much more. And now we're stuck with this high cost of living and the inflation that just continues. May slow down, but it still continues. And inflation is actually not going away. It's just trajectory is slowing down a little bit. That's all. And this story goes on to talk about how tax cuts may actually help some people and get people back into restaurants, folks. I mean, do you think that cutting taxes is going to have people go out to eat? I mean, maybe. Look what happened in 2020. Did people save the money that they got from the stimulus checks? Well, no, about half the people had to spend the money just on bills, necessities, paying their utilities. paying rent, etc. The other half went out and bought things they normally would not have bought, like vehicles. We saw vehicle prices go up. It helped some people get a down payment on a home because you only need, 3.5%, sometimes zero down payment now. It helped people get into some of these things that they normally would not have gotten into. And of course, we saw prices rise because of that. But yeah, tax cuts is not going to help. It may seem like it's helping temporarily, but in the long run, it's just going to hurt more people because people will go out and buy things. So I'm almost blaming the people more than I am the policymakers. The policymakers are obviously not doing anything to help. But if it weren't for the way people are spending this money, for example, if people would have maybe saved the money and invested the money, that would have been much better for most people. But most people who give money, they're just going to waste it, go out and spend it right away. Unfortunately, a lot of people do, like I said, still spend it on what they have to spend it on just to keep a roof over their head, to keep the lights on. So bottom line, folks, it's a big mess here. All right, people, let's move on here. Let's talk about real estate. Everybody wants to know about real estate, so we have to include some real estate and housing market information, housing bubble news in every report. I try to in every report. And we're not talking about my future home back here. Am I joking? Maybe not. More home builders are slashing prices as buyers stay away from the housing market. The share of builders slashing prices on newly built homes reaches a 3-year high. So just as I've been saying here, folks, we're not going to see a housing crash, but things are definitely changing. And we're starting to see more news like this. In our previous report, we talked about the cities that are seeing the number of people slashing prices on their home. In some cities, it's 1 in 4 sellers are having to cut their prices. We didn't see that even 2 or 3 years ago. Homes were flying off the market. Sometimes the day they got put on the market, you'd see 10, 20 offers. Things have actually slowed down now to a trickle. So are we on the verge of something huge or some sort of big housing downturn, right? I don't think it's going to be a crash, though, but I do think we're headed for a significant downturn in prices here in the housing market in the U.S. Out of a market watch here, the number of home builders, home builder confidence sank to a 2-year low as buyers continue to remain on strike. So it looks like we need more stimulus checks, folks, to get people confident enough to buy a home. But will that help? It'll probably hurt more because it'll make home prices go up more. And, it's too bad it has to be like that, folks. The consequence of easy money and free money, stimulus checks, usually equals inflation. But when people have to work for it and can't just borrow it, then you see price levels remain pretty steady and you don't see bubbles like we're seeing right now in the housing market and in other places. Lennar sees home prices drop to a 5-year low, but they're still too high, of course. Yeah, that's true. Also out of Market Watch, home builders stocks rallies as profitability on home sales meets expectations and appears to have stabilized. But the big story here is Lennar, builder of new homes, prices dropped to 5-year low. Wow. Now, new homes are only about 15% of all home sales, so this is not going to crash the entire housing market, but it's definitely significant here. Average sale prices for homes in the last quarter were the lowest in 5 years. So interesting, folks. So we'll have to keep an eye on that and see if that continues to dropping and see if that's going to spread across the housing market. All right, but sadly, folks, we have more of this to think about. Hopefully not worry about, but to think about. And people maybe are happy that invested in these defense stocks and these, these stocks that go up when wars happen. So maybe some people are making money off of this, folks, but I hope this stops and gets de-escalated very, very quickly, because when missiles start flying, folks, and now with the U.S. being involved, nothing good can come out of that, folks. You could say, I'm going to invest, I'm going to profit from these defense companies, defense contractors, and others. But I would, even if I had defense stocks in my portfolio, which I don't, I would not be happy for this to escalate at all. On to some other news here. Duracell is suing rival battery maker Energizer over misleading battery life claims. Interesting. America's top battery brands are locked in a power struggle. Duracell has filed a lawsuit against Energizer, accusing the rival battery maker of running deceptive advertising campaign. Actually, I've got to say, just out of my personal use here, I prefer Energizer over Duracell. I've got this doorbell, not Ring, but Blink. I use Blink, the doorbell, and I've got Energizers in that, and it picks up motion, so it's multiple times a day, probably whatever, 10, 20, 30 times a day. Every time somebody walks in and out of the house, it picks it up and sends it to the phone and records it. And I haven't changed these batteries in like 2 years. And this is something that's detecting motion every day, unless we're out of town, which is rarely, maybe once, twice a year, multiple times a day, and it's still going 2 years. So I love Energizer. Maybe I'm wrong. Do you think Duracell's better? But you see these battery companies and companies in general, sometimes they'll trash the competition or say ours are better or our brand beat this brand. In a complaint filed in court in Manhattan, which is owned by Warren Buffett's Berkshire Hathaway, alleged that Energizer's new ad campaign falsely states that Energizer Max batteries outlast Duracell Power Boost batteries by 10%. That's a tricky one there, because they could conduct their own study in private and they could say, yeah, we put these batteries in 2 different items and one ran out before the other one lasted 10% in our study. So how do you claim that that's false if that actually is something that they're saying that they did in private? The ad's claims have caused Duracell to suffer irreparable reputational harm, including tarnishing of its brand and loss of goodwill. Duracell alleged that the sole basis for Energizer's 10% claim is a comparison of the 2 brands' AA batteries under one industry standard, but battery performance is also measured by other standards, like is it consistent in the power? Is it full power instead of just lasting longer? The Energizer Max false advertising is a clear effort by Energizer to expand its market share blah, 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 at Duracell's expense. I love Energizer, so I don't know. It's just interesting to see these companies go after each other. And you always see the brand say 4 out of 5 people, stuff like that. 9 out of 10 people chose this brand, but then the other brand will say something similar. So, what is it, right? And where's the 5th dentist? The 4 out of 5 dentists recommend this toothpaste. What toothpaste is the 5th dentist recommending? That's what I want to know. Right, people, a couple more things to get into. Let's talk about some of this entertainment spending, and we're going to look at the box office numbers here in a minute. A few years ago, when we saw a lot of trouble with the movie theaters and theaters closing down, some people had predicted that by 2025 there would be no more theaters. It actually still hasn't happened. There's still theaters in business. I've got one in a mall, maybe 7 or 8 miles from my house in a city called El Cajon. It's actually still open, and people still go there. I mean, attendance is down. But they're finding new ways to take money. They search your bag when you go in there. We saw a movie a couple months ago. They search your bags to make sure you're not bringing in food and drink. That way you can buy one of their like $7 drinks. And I think the smallest popcorn was like $7.50. And then to get the bigger popcorn is only $1 more. So you might as well get the $8.50 popcorn. Or maybe it was $9, maybe even $10. I just remember it was crazy. I tried not to buy anything there. But they search you to make sure you're not bringing in food, so you buy their expensive stuff. Anyway, the box office, folks, movies are still grossing some good money here. How to Train Your Dragon was the #1 movie, and that's new in the top grossing movies. $84 million, folks. Lilo and Stitch, #2, that's $15 million grossed. Materialists, #3 movie, $12 million grossed. Mission Impossible: The Final Reckoning. Wow. I've never seen one Mission Impossible, folks. Some of you are probably going to laugh at me for saying that. What's this, the 10th one now? I don't know. $10.5 million on that one. From the World of John Wick, Ballerina. That's the 5th one here. $9.7 million. And these are just for the week. Some of these have grossed, like Lilo and Stitch, grossed $366 million total. Mission Impossible, $166 million. Final Destination Bloodlines, I don't think I mentioned that. That's section #7. 130 million. Sinners dropped all the way to number 10, which has been out for a few months now. That's the one I actually went and saw. That one grossed $275 million, folks. So people are still spending money on entertainment. It seems that certain traffic is down, like restaurant traffic is down and movie traffic is down. But people are still making money. Some of these businesses are still making money. They're finding a way to stay open. Some of them, like searching people's bags at the movie theater. I wonder if that led to their bottom line being more steady because people were forced to buy the $9, $10 popcorns and $8 drinks. I mean, please let me know what you think about this, folks. The wars, is this going to escalate? What else do we talk about here? Of course, entertainment here, the movies, the housing market. One of the home builders, Lennar, home prices lowest in 5 years. Let me know about this. Any of this, folks? Are you preparing? Are you stacking? Are you hoarding cash, waiting for the collapse? I always like to hear from you. I know I ask that question about every other episode, but I always like to hear from you. If you haven't commented on this channel, make this your first time commenting down below this video. And we'll hope to see you here next time. Please make sure you got those alerts checked so you don't miss a report. As always, keep stacking, everybody. Bye for now. Big love. Peace.